Hello traders, today we will discuss the moving average crossover trading strategy as outlined on the renkotraders.com website. For those of you who are directly visiting this video, you can click on the link in the comment section and read in detail about this trading setup. Now, the moving average strategy is probably one of the most simplest of all methods that you can find. Yet it's rather interesting to see that not many traders actually stick to this method. It could be many different reasons. Probably it's too simple, or maybe people tend to believe in the fact that when the markets are ranging, it's easy to lose money. However, in this moving average crossover strategy, we make use of retracements and support and resistance levels. As you will see in this video, the approach to trading the moving average crossover is a little bit different, but it's definitely not complicated. If you're looking for a trend following system, I would definitely recommend you to keep an eye out on this trading approach. So the buy rules: we make use of the 20 and 50 exponential moving average. We wait for the EMAs to make a bullish or a bearish crossover, and we wait for a retracement to the identified support or resistance level. It's as simple as that. So the chart you see on the screen is Euro USD 30 pips, and I've applied a 20 and 50 pip moving average here. Sorry, 20 and 50 period moving average. So after this bullish crossover right here, the trend has been strong and prices were moving to the upside. So let me just mark this here. And after prices were going up, they started to fall, and here we got a bearish crossover. So the next step is to identify the support and resistance levels. In this case, because it is a bearish crossover, we are looking for a resistance level, which, as you can see, forms right here between 1.14 and 1.137. So after the crossover, prices fell, and then they retraced right into the support and resistance level. So this is where you would go short. You would apply your stop loss at the most recent swing high, which is right here, and your first target would be the previous low, which is at 1.11. Once the first target is reached, you can then continue to use the same method as I've outlined here for the another lower support level, and you can book your second targets here, or you could simply trail your stops to the 50 period moving average. Now this trade is still unfolding, so it will take a while before the profits can be realized. Let's take a look at the Usdchf. Notice the bearish moving average crossover right here. We then identified the resistance level, which is between 0.993 and 0.996. Prices fell sharply. They made a bullish crossover, and it hit right near the resistance before reversing, and prices fell again. As you can see, we've applied a lower support right here, and prices broke through that level. So right now, as long as the moving averages do not make a bearish crossover, the long position would still be valid, although this is not the exact kind of a setup that I would be trading. Now in this chart, the AUD-USD, what I've done is I've applied a Ema Crossover signal, which is a very basic indicator that you can find on the web. Just Google for Ema Crossover signal indicator for MT4 and you'll come across this. The purpose of using this indicator is simply to make it easier to identify when the EMAs are crossing over. So as you can see, you've got a bearish crossover right here. The support and resistance level, the resistance level is plotted at 765 and 762. Although I do think probably this might be a resistance level as well at 756. Anyway, the whole point is that we wait for prices to retrace, preferably to 756 or to 762 level, and we short from there. For the short position, the stops would be placed here at the swing high, which is 771. And for the target, we would be looking at the previous low at 717. As you can see, the risk reward is about 150 pips risk, and you've got a $600 pip target right here. Let's take a look at some of the previous examples. You have a bullish crossover right here, so you will be waiting for prices to retrace to this support with your stop set here. And as you can see, prices broke through the support and even hit our stops. Now, as I mentioned, this system does have its own share of losses, but as long as you employ proper risk management techniques and apply a bit of common sense to your trades, I don't see a reason why you can't convert this into a winning trade. Now take a look at this example where you've got, let's assume that both these two setups were resulted in a loss, and you've got a bullish crossover right here. You have your support and resistance level plotted here, the support. So prices broke up, fell back, retraced to the support, and then started to rally again. Then here you've got your bearish crossover. Prices fell, but they did not retrace back to the resistance level. So this would have been a good trade, but assuming that you put your resistance level here, it would have been a missed opportunity. Again, you've got a bit of chop here, and both the two trades resulted in a loss. Then you've got support and a support level right here. Prices made a bullish crossover, and they fell back here. And as you can see, prices were making lower highs, so if you apply a bit of logic, you would already know that prices could probably push lower. Then you've got your resistance level here after the bearish crossover. Prices went back and broke below the previous low. And then again you had another bullish crossover. Prices rallied, retraced, went back, fell, started making lower highs, and that is when you know that you need to exit. You have a bit of a chop here. And then prices started to move down, and as you can see, price started to move higher, but then you got a bullish crossover signal, so which would make this particular setup invalidated. But then you have your new entries right here at the support with your stop loss sitting right here. Prices fell back and continued to rally, and this would have given you a very nice amount of profit on the table. Looking at the USD CAD, now as you can see, I've also plotted a trend line here. The trading system is again an open-ended system, so you can apply your own trading methods. You could look at trend lines, you could look at probably chart patterns, whatever. The options are endless. As long as the basic rules remain the same, you can use other methods to validate the entry and exit levels. So right now in the USD CAD, we had a bearish crossover here, So I'm waiting for prices to retrace towards 1.299, 1.302 before starting to decline lower. You had another good long opportunity sitting right here with prices falling right into the identified support level, and you had a nice strong rally. The next setup here was a bearish crossover. You had your resistance level sitting right here with your stops probably coming up somewhere above 1.4436, and then you had a strong bearish decline which would have again given you very good decent profits. Over here you have a bullish crossover. Your support level would be sitting near 1.269 and 1.266. As you can see, prices fell right here, so if I were to take long, my stops would be sitting at 1.26 with my entry at 1.269, and I would be targeting the minor resistance at 1.293 and 1.299, and depending on how the moving averages line up at this level, we would be taking a short position again. This is the Kiwi dollar. You have a bullish crossover. The support level was identified here, but prices haven't fallen sharply to this level, so we continue to wait. On the other hand, you've got a bearish crossover right here, so I would be marking this level on the chart. And probably here, which is at 0.69. This would be a potentially good level to go long from. However, if prices break, we could expect to see a eventual move back to 654 and 651. An interesting point about this support level is that it was resistance, and at the same time it's now turned into support. So this would be a strong level that the Kiwi is likely to bounce off. So guys, this basically summarizes the two moving average crossover trading strategy for the Renko charts. As you can see, it's very simple, and I would say nearly mechanical. The only subjective part is to identify the support and resistance levels, which again is not a big deal, because you just look for the region where you have the bullish or bearish crossover, and just eyeball the chart and look for key levels where prices have reversed, and build a support or a resistance level at that point, and watch how prices reverse near that level, and then take a shot. So I hope this video has been helpful. If any of you have any questions, feel free to let me know in the comments. Thanks and have a good day.